Hello and welcome to Zee Business. Capsule gold and silver prices have reached newer highs and the record rally doesn't seem to be slowing down anytime soon. Gold prices managed to rise past $5,100 an ounce mark for the first time on Monday, having touched an all-time high of $5,145 an ounce as safe haven demand lingered amid geopolitical uncertainties, while silver too hovered near all-time highs above $117 an ounce in the previous trading session. US gold futures for February paired early session losses on Tuesday to stay above $5,100 an ounce mark. We saw US President Donald Trump saying on Monday that he would raise tariff on South Korean autos, lumber and pharmaceutical imports to 25% from current 15% now, while criticizing Seoul for failing to enact a trade deal with Washington. Silver prices witnessed a record high above $117 an ounce on Monday. The white metal has surged nearly 55% so far this year. Similarly, platinum prices we saw slipping in the previous trading session by 5% to settle near $2,629 an ounce after hitting a record high above $2,900 an ounce in the previous trading session. Oil prices have slipped for second trading session and continue to trade in a very tight range as investors kept an eye on resumption in supply from Kazakhstan, but prices declines were limited as a massive winter storm hit crude production and affected the refineries on the US Gulf Coast. Brent crude prices have edged near $65 a barrel, while WTI crude is range bound near $60 a barrel. Further, on the supply front, 8 members of OPEC Plus are expected to keep the group's pause on oil output increases for March at the meeting which is scheduled on February 1st, which is Sunday. Copper prices retreated on Tuesday after nearing record highs as the red metal came under pressure after profit booking and the Shanghai futures exchanges move to further raise the margin ratios. Copper on London Metal Exchange declined over 1% to hover between $13,000 and $13,100 a ton on some profit booking selling, which led to the declines. Copper's decline came after Shanghai Futures Exchange adjusted the margin ratios, a move traders saw as mitigating the risk amid the rising volatility. The move on Monday was the bourse's second since January 2020th, targeting the two best performing metals in the base metal complex, that is copper and aluminium. We saw exchange raising the margin requirements and widening the price limits for both the metals, and it is effective from January 20th. Malaysian palm oil is where you need to keep your eye on because the commodity is trading close to 2-month highs on Bursa Malaysia, and this happens to be its second consecutive rise on Tuesday. We have seen the prices are holding above 4,200 ringgit a ton, clearly supported by the rise in rival edible oils at the Dalian exchange, along with good export and lower production data, which is lending much needed support to the market. Also, let me remind you that New Year and Ramadan season in the February leads to a stronger demand ahead of the lunar New Year, which is underpinning the prices.